What's good, YouTube? Welcome back to the channel. It's your boy Keno Brown, and it's another great day to be great. Listen, I got what you need in this video. I got what you want. You've always wanted this, and I'm always trying to give it to you for free. For free. You know what it is. Come on, think about it. What could it be? It's the gem of all gems. It's the back testing session. Come on. Come on. I give you my full strategy for free. I break down all of my trades for free. And I put y'all on game, man. I gave y'all sauce. I give y'all all that. In this one here back testing session, it covers like a whole year's worth of one-on-ones. Now I'm lying. Lock in for the one-on-ones. Anyway, this back testing session is what you've been looking for. Let's get right into it. Let's go. Yo. So let's start with the most transparent part of my trading. And that's my trading journal. So I'm gonna be honest with you guys, bro. I'm not having a good month. Although we're going to review the first week of the month, and my next back testing session is going to be the second week, and then it's going to be third week, etc., etc. I'm not having a good start or having a good month right now. The month of March. But I'm going to be honest with you guys. I have noticed something. I have noticed that my trades, it's not necessarily that they're not working out. It's more like me. I'm not executing fast enough. Like, I'm not catching the trades as fast as I'm supposed to catch the trades. I feel like I'm second guessing myself, or like, hesitating a little bit. So in this back testing session, I'm going to be practicing what I need to do on the charts. This is what I urge you guys to do. Make sure you're reviewing your journal. Make sure you're back testing. Make sure you're doing all the things that you need to do. Stay sharp, to stay on point. You know what I mean? But that's what I'm going to do. So the first week of March was, I made money on the Monday, $268, $500, then I lost $300, then I lost $200. So I was up $333 for the first week. Then the next week, lost $100, lost $600, lost $300, made $300. The last week, which is this like last week, basically, 400, negative 400, negative 100, negative 400. So you can see on average, I don't take more than a $500 loss. Is usually small losses, really less than like 400. But I'm gonna get into it. So let's get on the charts. First things first. If you're new here, there's a program that I got going on, man. Listen, this is what I do. I focus on structure. First thing I come on the charts, I want to know what structure is like. I want to make sure I'm in alignment with structure, right? Why do I want to make sure that I'm in alignment with structure? Because structure shows you where the market is going, and the trend is usually your friend. If you think about it, we are not moving the markets in any way, form, or fashion. We're a little peons in a pot. We're a little, little bugs, little wasps that you could slap out the air pretty easily. When we're talking about the market that's moving trillions, billions of dollars every week, we're not a drop in the bucket, for real. We're probably like a sprinkle, like you ever had like I would say like a sand in the beach, like a vast beach. Just that you go to a Myrtle Beach or Florida Beach or whatever beach that you've been to, and you look at how wide and big it is. Pause. You're just one speck of sand in that huge, vast beach, horizon of beach. Yep, that's just you. That's you right there. You're not moving nothing. You're not making a wave. You're not really important. Really, I'm gonna be honest with you. In the markets, obviously, you're important in your own life. You're important to your family. You're important to other people who love you. That is amazing. But when we're talking about the markets, you're not that important. You do not make markets move. You don't control what the market does. We're little peons. So we want to move with the people who actually move the markets, the big players, the banks, the institutions, the hedge funds, the people who really got the money that make the markets move. You feel me? And we know who these people are based on the trend, where they want to go based on the trend. If you focus on the trend, like if you see this is we made a low, then we made a high, lower high, then made a lower low, then we made a lower high, then we made a lower low. That's a downtrend. This right here is a downtrend. If you look over here, we made a high, we made a lower high, we made a higher high, we made a lower high, then we made a higher high. This is an uptrend right here, right? So let's get rid of these right here. If you look at this, start from the top. Let's just start from anywhere right here. Boom, low, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. In this area right here, it was some consolidation. I'm not gonna lie, it was nasty work in between. This really nasty work, nasty consolidation. But this is what the markets look like. I would say right here is pretty much consolidated, but for the most part, we're in a downtrend. So we know that the big boys, the banks, the institutions, the hedge funds, the people who are really moving money in the markets, they're on a downtrend for the most part. So we know high probability trades are going to be sells. That's your highest probability trades. Where you catch those trades is based on structure, right? You want to catch trades based on a last previous area that it went to, that it shorted from. Like, so let me draw up my areas of interest. This is what I call areas of interest. So this right here, boom, we got this down here, boom, we got another one up here. Got another area of interest right there. I would say we have another interest right there, but as of right now, there's nothing else that I really care to mark off on a 1 hour time frame. But these are the areas of interest. So if you think about it, let's say price gets back up here. Since the last time it been up here, what happened? It dropped, right? Price gets back up here. The last time it came here, what happened? It dropped. Price gets up here. The last time it came up here, it dropped. Boom. If you look right, the last time it came up here, oh, that was a nasty arrow. Oh God. Let me try to make that nice and pretty. Okay. Drawing skills with this mouse is terrible. If you look at it, boom, it came back to the same area. Boom, drop. What happened the last time it got here? It dropped. Now look left. Look right, I mean. Look right. Last time I get here, what happens? It drops. Come back here again. We're here again. What do we expect? To drop, right? But the thing that you have to understand is, the more times something goes to an area, the more times, let me get rid of all these blue lines. That's making the charts ugly. The more times price gets back to a certain area that it drops them, the weaker it gets. So you can see it came here 1, 2, 3 times. By the 4th time I get here, this is weak. Price is already now breaking it to the upside. So what am I looking for now? Since we look like we're changing directions, we look like we're no longer in the same direction. What I'm looking for now? I'm looking for price to come back down and probably shoot back up higher again. Possible. There's a possibility there. I'm not sure if that's what's gonna happen, but there's the possibility, right? Now, same thing I did on a 1 hour time frame, just to see like areas of interest, to see like what the big boys are doing on a higher time frame, is the same thing I'm doing on the 15-minute time frame. I want to do the same thing on the 15-minute timer. I do have to be honest, I don't really see much that I would draw out, because structure is like in consolidation right now. So in consolidation, it's harder to draw up structure on the smaller time frame because it's going like that. On any time frame, because consolidation is just consolidation. There's no real clear structure. But we can see an area that price has bounced off numerous times and dropped numerous times. But we're back there again right before 9:30, right before 9 o'clock. But we're gonna fast forward to 9:30. Boom, boom. This is right before 9:30, right? So we know down here price already broken. So we have a possibility, high probability, price comes down here. Since it already broke it, it might shoot back up, but we also have the probability that it could come back down here and just drop, go back down there, especially because it's been consolidating. Maybe it's just opening the highs and opening the lows. So maybe it's just going higher to grab more liquidity to bring it back down, and then it's going lower to grab more liquidity to bring it back higher. The market moves weird, but it's very consistent. It has patterns that if you pay attention to the patterns, you'll notice something. But I only know this because of my experience. Anyway, I don't see anything on the 15-minute time frame that I would be like, I need to mark this off. Maybe right here. Yeah, maybe I'll just mark this off because this is like a point that I'm like, okay, price did shoot up here twice, then dropped off. That's pretty much it. Besides that, I don't see nothing. So let's drop down to the 15-minute, the 1-minute charts. This is where I look for entries. This is where I want to get into trades. This is a time frame, right? So boom, what I'm waiting for, boom, we can see structure building up too. Structure is like boom, it's dropping, dropped. Now it's creating structure back to the upside. Broke structure now. Boom, it came back down. Boom, it probably could just go up right here. Don't know, but I'm only willing to play. I'm only looking for trades when we get back down to the area of interest, because at this area of interest is where I know big players are here. Buyers and sellers are here. They're located in this area. This is where they want to, start making price move. This is where price is the most beneficial for me, right? Highest probability that I can catch a trade. I don't trade in just like dead zones unless like price already got there. Then I can see price continuing the structure back higher. But for the most part, I don't play in those areas of interest. I mean, no areas of interest, like if it's a dead zone. So boom, next candle. What is that? 930 candle. Boom. Let's see. 930 shot. What can we notice here? The trend is continuing. Boom. Trend is continuing. Made a high, made a low, made a high, made a low. We can see that trend is continuing. Let's see if we can catch a trade. Trend is continuing. Trend. What? There's something that I need y'all to notice. Maybe you haven't seen it, but let's draw up this trend again. Remember, boom, we made a high. We started to break structure. We broke structure right here. We came down. We broke low. We made a high. We made a low. We made a high up here. What happened down here? What happened here? We broke structure. Ooh. Now, let's see if we're going to go back to this downside. If we get back down here, I'm not looking to buy it back up. Why? Because we already broke structure to come back down. So I might look for something like this to take it back lower. Possibility. It just depends on how it looks like, especially on a higher time frame. If I'm looking at a 15-minute time frame and I see the candles wicking like a huge wick rejection, then I'm going to continue to look for buys. But if it's looking strong, the 15-minute candle is closing strong, I'm definitely going to continue the sales. I don't like to go against the trend. Boom. Come on. Boom. Look at that. Look at that. Look at the continuation of the trend. You see that? You see that? You see that price right there? You see that? Boom. You see that? All right. Price now officially back in this area of interest. Now I'm going to look for trade setups to take. I'm going to look to take it continue. I'm looking to continue to take it as sells, because we can see the trend is going back down. So price probably already got the liquidity that was up here and now is reversing to go back down. So I'm actually, obviously, the candles are not printing live, but I'm telling you like my thought process of trading, even in the backtesting session. This is like how I'm thinking of the trade. This is how I'm like walking through the setups of how I take a trade. Boom. We're looking for a nice close. We're looking for a bullish engulfing candle close, just to show us that price is ready to go back down. Ooh, that's it. That's the one right there. So boom, we got this high. I'm gonna wait to get back in when price pull back down. This is where price showed me, all right, sellers are back in control. This is where price showed me sellers are back in control right here. Right, exactly right here is where sellers has gotten back into control. Boom. We got tapped in at 10:10, 10:11, 10:12, 10:13, 10:14. It took 4 minutes to hit TP1, 5 minutes to hit TP2. Do you see that worked? We just went with the trend, really. We just followed the trend. From the high time frame, we already knew we was in a bearish market, although it was semi-consolidating, right? We seen that a price came to an area 3 times in the past and it dropped. Came back there again, 4th time. It went a little higher. What do we expect to be above old highs and old lows? We expect entries like limit orders, market orders, people to be waiting right there with their stop losses or entries for a breakout or just to get stopped or whatever. We call that liquidity. So liquidity was above here. Price came, grabbed the liquidity, and then broke structure. You can see it broke structure. Then it started creating structure to the downside, waiting for the price to get in that area of interest that I know this is the only place I want to play. It's like a playground. I don't want to play on the street. I want to play in the playground. Right? So I'm waiting for price to get dropped, get back into this area of interest. Let's see how much points I was risking on this trade. Oh, risking 44 points. Yeah, I probably would have took TP2 for sure. For sure. But let's see if we can. Probably could have get more than TP2. Nope. Price came back and broke us even. And then even broke structure. You can see price broke structure right here. It broke the highs. It looked like at this point. So yes, we got the sell. Matter of fact, let me go back. Let me go to my journal. Let's see if that's the trade I took. Review journal. Tell me. Oh, I was gonna say I didn't journal. That's crazy. See, this is the exact same trade I took. BTW. I journaled this 3 weeks ago, so I didn't do this just now before I came on the chart. Did it. All right, so let's get rid of these. So now let's continue the structure. Price came back up here. Boom. Came back down here. Boom. What did it do? Broke structure. You can see it came higher than this high. So now, with that being said, we can look for price to drop down and then continue to push it back up. We're already in the area of interest. That's where I'm looking for buys or sells. This is where I'm looking to play at. So I can possibly catch a trade to continue to play in this area of interest. So boom, let's just see. I didn't take this trade. Let's just see. Theoretically, I would take this trade. Theoretically. Okay, we dropped. Looking for a bullish engulfing. That's not it yet. Show me that. Oh, that trade, that just showed me that the buyers are controlled now. This right here, I would take this trade right here. Now I know buyers are in control. How much points am I risking on this one? Let's see. 60. Yeah. In this market, like in consolidation markets, your risk, how much risk you're going to be taking is going to be wider because price, it's wicking back and forth. It has a lot of volatility of going back up and down, up and down, up and down. So your stop losses is probably going to be wider most times. So I would take this trade. Boom. Oh, it just left. Oh, tap this in. Tap this in right here at 47. Let's see if it hits stop loss or it continues. As I said, we're in a consolidation. See that it's in the consolidation market. Like, I hate consolidation market because it has a lot of volatility that makes it go up and down, up and down, up and down. Obviously, you could have taken an aggressive entry as soon as you've seen the bullish engulfing, and you could have got TP1. But I don't take aggressive entries. I take conservative entries. So, as I said, you can see that price now came up here and then it created structure again. Then boom, this is it breaking structure again. So yes, you would have lost that trade. What time is it now? 11:02. I don't even trade past 11 o'clock. I ain't even gonna lie to you, bro. I don't even trade past 11 o'clock. Let's see if it continues to drop. You can see, ew. Look how much times it just went back up and down, up and down, up and down, and finally. So I hate consolidation markets. I like trending markets. So let's go to the next day. Then it started to drop. You can see that. You seen that? You see this disgustingness? Look at this. This is disgusting. Let me see. Price started down here. Boom. It went lower, then went higher than the last high, then it went lower than the last low, then it went higher than the last high, then went low. Well, that last high is right here. Then went lower than the last low. This is what you call consolidation, but it's opening the spreads. It's opening both sides, so it's going higher because it knows people's stop loss is there, so it's grabbing liquidity. Going lower because no people's stop loss is there, grabbing liquidity. Going higher, people's stop loss is there. Going lower, grabbing liquidity. Going higher, grabbing liquidity. Going lower, grabbing liquidity. It's like building before the explosion until where it's going to go. But consolidation markets is really gross. I'm not gonna lie. It's really hard to trade. It's really not the best market conditions to be trading in. Even if you're swinging the trade, it's just not the best trade. It's not the best. It's not the best areas to trade in. You know, it's not the best conditions. But let's fast forward into the next day. Oh, wait, I fast forwarded a little too fast. Sorry. So I would say everything that's here on the charts currently, I would leave. I'll leave everything on the charts right here, but I would probably have to go all the way to the left to see another area of interest that price probably something like this, like an area of interest like this, and I would have to draw it down here. So yeah, so I'll probably wait for price to get back down here for me to take either buy from or sell from, or I can sell from these areas. So here's my analysis. Obviously you guys seen it because I fast forwarded a little too far, but I can see price going back up here, then dropping, or going down here and then pushing. One of the two. Let's see. 15-minute time frame. Is there anything that I would like to mark up? On the 15-minute time frame, we can see that this area right here is the last low, last significant low. So I would mark up this area right here. Why? Because that's the last lower low before price is right here. Created a lower high. It probably can come back down to the lower low, grab liquidity, push up. Who knows? Who knows? We don't know. We just want to mark up areas of interest that we can possibly play in. Let's fast forward. 9:30. Oh, you can see right before 9:30, it did exactly what I said. It went up here, but sometimes that's what happens too. Price starts to move before you can even take the trade. So it did exactly what I said. Pushed up, dropped. Tough. It is what it is. It's tough. Now we're in the next area of interest. Let's see if we can play in that area of interest. This is the 9:30 candle. Let's see what 9:30 do. It's dropping with no pullback. Oh, disgusting. No, we finally got a pullback. A candle that looks like drop like this, I wouldn't try to fight it. I wouldn't try to take buys. I'm not gonna lie. Unless the candle closes now and shows me like a big wick. Like if the candle closes and we can see like the candlestick closes up like up here. So that means that we had bar candles all the way come back up here and then it closes right here. Then I'll be like, okay, we seen a wick rejection. We could possibly look for an area to take price long again, possibly. But for the most part, I'm not going against this trend. I'm not going against a candle that looks like that. So the next bullish candle, I'm taking it. Next bearish candle, next bearish engulfing candle, I'm taking it. So we got a small pullback in this area of interest. Remember, this area of interest coming all the way from the left because I had no other areas of interest to look at besides the one that's all the way to the left. So remember, this is coming off from all the way to the left. So I'm waiting for the first bearish engulfing. I'm taking that, John. I don't like this one. I'm gonna wait for it to close like I think close under this candle, like something like this. I'll take it. That's disgusting too. Ew. So I'll probably widen up my stop loss and probably take my entry after this one. That's even tough. Right, let's see if we when and where did we get this trade. Ooh, there it goes. There it goes. So this is now my trade. Yes, price dropped. Boom, we got this bearish engulfing candle that showed us here are the sellers. The sellers are winning now. I'm waiting for what? I'm waiting for the pullback to this area of interest, and we're taking it. So once we get here, get me in the trade. I'm risking about how much points am I risking on this trade? 43. So about 43 points. That's about like $245. Let's see. Ooh, look at that. Hit TP2 already. Oh, there it is. Oh, there it is. Oh, there it is. So boom, price came and tapped it right here at 944. Let's see if we get stopped out. We just got in. TP1 already hit. So 944 we got tapped in. 945. TP1 already hit. It's golden. We already set stop loss at break even. We can't lose. Now it's wicking. Ew. Why you wicking like that? I'm gonna hit TP2, man. There we go. TP2 hit at 949. Hey, that's it right there. That's the setup right there. Let me see if that's the exact trade I took. Did I journal? I did journal. And look, it's the exact same trade setup I took. So there's no cap in my rep. I be trying to tell you, I don't be capping. I don't do none of that stuff. Like, I'm fully transparent. So let's go to the next day where I did take a loss. The next 2 days. Let's see, even on this Friday, did I trade on this Friday? I did. I don't know why the data's not collecting what happened on this Friday. Maybe I took a win. Maybe I took a loss. Who knows? Let me see. Oh, this was a demo trade. I didn't take this trade. Why didn't I trade this Friday? Maybe it was something happened. Maybe it was Trump was speaking, Powell was speaking. Something happened on this Friday. Maybe that's why I didn't trade. So this was a demo trade, but we didn't even review the demo trade. Still, like, it don't matter. All right, let's fast forward to the next day. As you guys can see, full transparency, this is exactly what I do. I'm walking you guys through the thought process, the how am I looking at the trades in action, like live. This is how I'll be taking the trade. Like, this is the thought process behind me going for a trade. Okay, so I would say this is now useless. This is useless. This useless. These lines are useless. I don't know what this is over here. I would say this area of interest down here is still useful. Let me draw out some new areas of interest. This area of interest right here. This down here. That's a good area of interest down there. And up here. I don't see anything else that I'm fancying on a 1 hour time frame. Not really. Yep, that's pretty much it. Let's see if in a 15-minute time frame. But on the 1 hour time frame, let's just look at it. What does it look like now? Fully bearish. Like, as I told you guys, it was collecting orders before it started to finally find its direction, which was sells, and it's dropping pretty hard. Let's go on the 15-minute time frame. Is there anything I want to draw up on the 15-minute time frame? Any areas of interest? Not necessarily. Not necessarily. Yeah, I would say not necessarily. Pretty much every area of interest is already marked off for the 1 hour time frame. Yeah, not necessarily. All right, let's drop to the 1 minute time frame. All right, we're on a 1 minute time frame now. Let's fast forward to 9:30 just a little bit. 1, 2. This is right about 9:30. Again, only areas of interest, only areas I'm willing to play in is down here. But you can see On the 1 minute time frame, we definitely look like it's a bearish trend. You can see the trend. Look at the trend. Just follow the trend. Follow the trend. Trend is your friend. 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 Follow the trend. All right, let's get back. Boom. We dropping. Why are we down here? All right. Boom. Made a new high. Boom. Made a new low. Boom. Follow the trend. The trend is your friend. This is a 930 candle. We got a nice push up. We can look for the next bearish candle to start to take these sells from. So boom, we got 930 bullish candle. Waiting for a bearish engulfing. That wasn't it. Ooh, is it breaking structure? Yup, it broke structure. You can see it's breaking structure now. Came down here, came up here, came down here. Now broke structure. I can wait for price to get back down here to look for buys, but we're gonna see. We're gonna see, because I'm only willing to play in the areas of interest down here. So maybe that's the mistake I made and why I lost. I don't know. Not sure. Let's see. Was I even supposed to take a trade this day? Again, I don't know. See, you could have took a buy right here, like this trade idea. You could take this because you see price already came down here 929, but I wouldn't take this. I personally wouldn't take this. This is like a continuation of the trend. Wait for price to pull back. It's starting to shoot. You can see, boom. All right, it finally tapped in. See, went to break even, stopped out. See that? See that? I'm good. I'm good on the nonsense. You feel me? That's why I don't trade up there. I only trade in my areas of interest. I'm good on the nonsense. Dang, what the hell is happening this day? Jeez. Was I even supposed to trade this day? Like, for real? Disgusting price action, like 1023. And I personally right now I don't see a trade. So maybe I created a trade. Like I tend to do this a lot. I've been just creating in my head, fabricating something to do. I know I do that sometimes. It just doesn't even make sense. And be honest with y'all, there's nothing here for me to trade. I shouldn't have taken a trade this day. I shouldn't have taken a trade. You see, it's 11:13. I don't trade after 11 o'clock. Look, I lost $300. Let's see what the trade was. I must have created this trade. Super dumb trade. You see, off the rip. Super dumb trade. Super dumb. I had no reason to take this trade. I'm telling you, bro. I don't even know why I took this trade, for real. I must have created an area of interest to take a trade from. Like, let's go to the next day, bro. Like, that just pissed me off. You feel me? But this is the emotions that you need to go through. This is what you need to realize. Like, when you're reviewing your journal and your backtesting, like, you see, like, hey, there was no trade to be taken here. Cool. You review your journal and you be like, oh, I took a trade. What the hell I took this trade for? But then I go to my journal and my journal tells me, super dumb trade. Why did I take this trade? You feel me? So my journal reinforces the fact that I know I shouldn't have taken the trade. So I know, I remember, all right, I shouldn't have taken this trade this day, and I did. Why? Shouldn't have done it, right? So now I'm going back into the next week thinking of this. Hey, you can be better. So this day wasn't even supposed to be a losing day. It was supposed to be a no trading day. I find it very hard to not take a trade at all. I'm not gonna lie to you. That's a weakness of mine. Just not trading at all. That is a weakness of mine. Like, I have to be honest with you. That is a weakness. I feel like I have to put on a trade every day. Like, that is a weakness of mine. I can work on that. I'm gonna work on that. I'm being honest and transparent in every video. Like, I don't be hiding nothing from y'all at all, for real. 3, 4, 5. Okay. So now let's reevaluate the structure. What's happening here? Go from the highs, create a low, create a high, recreate a low, we created a high, we created a new low. Well, look, but this is not a low lower than this, but this created a new high. So now this is the low, right? So now we need to draw out this area of interest. This right here is now an area of interest, right? Because it broke structure currently right here. So I'm going to put this over here to mark it up with structure. I need thee, oh, I need thee every hour. I need thee. Oh, bless me now, my Savior. I'm thirsty. All right, that was crazy. I broke out in singing crazy words. All right, this is the 1 hour time frame mark. Let's see the 15-minute time frame. Do I see anything that I like the mark? On the 15. On the 15. I would say this. Mark this out. I can mark this out. These are not really super areas of interest. They're areas of interest, but that's on a 15-minute time frame. But they're definitely usually weaker than the 1 hour time frame areas of interest. Gotta be honest with you, but I still take them. You just gotta be patient with it. You know, you got to analyze. Don't try to find a trade out of no trade. Like, as I showed you guys, I just did that. Like, embarrassing. It really is embarrassing, but I did it. So let's mark up the structure. So look, boom, we came down. We created lows. We created a high. Created a low. High. Low. High. We didn't create a new low. So we possibly can continue going downward, right? At this point, it looks like if it comes and breaks these structure points right here, if it comes and breaks these points right here, then I'm looking to switch my trend to go back up high. But for right now, I'm definitely still looking for sells. I should be looking for sells. Let's see if that's what I did. I don't know if that's what I did, but this is what I should be still looking for. This I could say I could well, hold on, let me fast forward to 9:30 because I just want to skip to the point that I need to be looking at the charts. Okay. So we did break structure. Confusing though, because you can see, boom, we came down. We broke structure, then we broke structure again. Tough. All right, so I would start to look for sells again. I could continue to look for sells, especially at the high time frame. If you look at the higher time frame, the 1 hour time frame, we're selling. We're definitely selling off right now, but it broke structure. Look like it's going bullish. The 15-minute time frame, it's a lot going on. This would be a hard time to really trade, because even from the higher time frame, it's just not making any sense. Like on a higher time frame, we broke structure. On the 15-minute time frame, there's really no structure. On the 1 minute time frame, we're breaking structure on both sides. Tough. This would be a hard trade to take. Let's see what trade I did take. At this point, I'll probably be looking for sells. I should be looking for sells. Do I know if I did? I don't know. Let's see. Okay, I'm looking for the first. Okay, there he goes. That's it right there. 9:30, 9:31. This is where I should be taking the sell from, right here. Stop loss up here. Entry right here. This is where it should be taken. Hey, let's see. Ooh, price just dropped. He wasn't gonna come back and tap me in, buddy. Damn. All right. Damn. As I said about these aggressive entries, like, you can take aggressive entries, but I'm not a fan of aggressive entries. So you could have took it as soon as we had this bearish engulfing. Sellers are back in control. You could take it. Like, I'm not telling you you can't take it. I'm just showing you how I do it. You gotta make sure you know how to work it for you. If you're a more aggressive person, do what you gotta do, big dog. So we have a nice little pullback. So this trade idea might be runs. If it does come back here, I'll still take it. But let's see. It's because it hit already TP3. Ooh, hold on. When trades look like this with a stop loss like this, like I wouldn't, like, you feel me, like this trade right here with a doji, I wouldn't take it because the stop loss would be really tight. Like, let me see, if I would take this trade, stop loss would be right here, 19, 20 points. Like 20 points is not bad, don't get me wrong. I take a 20 points trade now, don't get me wrong, I take it. I definitely take it. That's only like I'm risking $120 max. I'll take it with one con. I'll take it. Let's get rid of that. I'll take it. I feel more secure if price would go and break this low right here. I'll feel more secure. Like if we get a bullish engulfing candle that shows me boom, I'll feel secure now. I'm taking this trade. You feel me? That's where I'm getting in. Let's see if price come back. Tap me. Did he even come back? Look how close he was. Damn. God damn. Look how close it was. This would have pissed me off, bro. All right. Gonna tap me in? What time is it now? 9:48. We got a lot of time left, so it's still early. Ooh. It tapped me in. Deep retracement. You see that? It even went back to this point where I could have got the 20-point stop loss trade. Ooh, deep retracement. Let's see if it's a quick stop loss. Oh, salute. It happens. Salute. Salute. For sure. This trade would have been tragic. What happened? We didn't even grab the low. Like, we didn't even grab like liquidity. That's so gay. You feel me? That's so gay. Look at that. We didn't even grab liquidity. Is down here. I want price to come back and chase this. Like, sometimes price gets so close to liquidity and don't grab it and then reverses. Like, it happens. But like, you know, like, come on, man. Come on. That was gay. Anyway, stop loss hit. Let's see. Let's review my trade idea. I lost $200 on this one. Let's see. Break even trade. I took a trade that went break even. Oh, I took this setup. Don't know. Yeah, I took. So after this one, so it looks like I didn't take the first one that I told you. Even that one, I even got stopped out on when price came back up. That's so disgusting. So this one would have got stopped out, even though I didn't even take this trade. I guess I was trying to be patient. I don't even know. So I took this trade right here. Price came here, but I shouldn't even have taken this trade. If I'm being honest, well, let's review structure again. Let's keep what you got. You gotta pay attention to structure, man. Structure's king. The structure, boom. Structure, boom. Structure, boom. Structure up, boom. Structure break. Now I should be looking for the buys. Like, it came down here, I should be looking for the buys. So let's just, I already know that it was a stop loss. If I would have taken sells, I already know where I took it. Let's look for the ideas for buys. Okay, that's it right there. You see that bullish engulfing candle? I'll take it after this. I feel comfortable right there. Let's see if it comes back and tap me in. Come on. Doesn't. Days like this is annoying, bro. I'm not gonna lie to you, bro. Days like this is annoying, dog. Now I'm looking for buys. Now, right? Right? I'm looking for buys now. Boom. Let's get rid of that. Since it didn't come back and tap me in like some whatever. It didn't tap me in. Now I'm looking for buys. I'll be like, all right, cool. This is a low pullback. I'll take buys after something like this. Take buys after price shows me it breaks this. Just like what it did. I want to get in on the next candle. Next candle, tap me in. Stop loss hit. What I'm supposed to do? I took on both ends, man. I'm following this. I'm following my strategy. I'm following the trend. I'm like, hey, man. As I told you, some days it gets like this. So this would have been 2 L's in a day. Tough. It is what it is. It is what it is. You can't win every trade, man. You can't win every trade, and you can't win every day. You just gotta risk manage. That's it. So let's see the markups, chart markups. Get rid of this. Come on, stop. Get rid of this. Keep this down here. I could probably draw this right here. Okay. So this is the Friday where I took this trade, but I didn't actually take a trade. I took a demo trade. I don't know why I took the demo trade, if I'm being honest. I don't know. But I took a demo trade and I did win that demo trade. So if I did take that trade that day, I would have won. Let's just see what happened on May 17th, March 17th, March 7th. Ooh, see that? See, I know it had to be a reason. Powell speaking, not trading. Powell speaking that day, I'm not trading, bro. Runs. So I know there was a reason for me not to take that trade that day. No, there was a reason. Had to be a reason. Okay. Let's mark up the 15-minute time frame. I'll say if you look at structure on the 15-minute time frame, look at the highs. We came down here. Low. We made a high, but we made a new low. Then we made a new high. Like probably right here. But right here, this price right here, you can see it left a wick. So I would still leave this area right here. I'll still mark this up as like that 15-minute. Damn, that's a huge. Damn. Let's see if anything went higher than that. I gotta investigate. You feel me? This is the part of the price where you gotta. Ooh, this went higher. Okay, this went higher. So I'll mark this up right here. You gotta be precise on the charts. You feel me? You got to be precise. Make sure you marking up these areas with precision, accuracy. Okay, so last day. It's Friday. I did win this day. Okay, let's see. Structure. You see structure is bearish. Follow me. It's disgusting because you can see price came down here, went up here, all the way up here. Then it came back down here. Then came back here. Then came back down here. So I would say we're in a bearish trend currently. So let's fast forward to 9:30. Yep, price is definitely bearish. You see, boom, created a high up here, low, high, low. Just follow trend. Trend is your friend. Follow the trend. All right, let's see. Oh, okay. Are we breaking structure now? Hold on. We broke structure. I could look for buys now. From this area, I could look for buys. Because we broke structure, I could look for buys. We back in this area of interest. Could look for buys now, for sure. Okay, this is where I would take buys from. Oh my god. I hate when this stop loss is so tight though. Oh, pause. Look at this. Look at this stop loss. How much points is this stop loss? 26. No, it's not even a tight. It just moved a lot in this day. It's not a tight stop loss at all. It's just moved a lot. Not a tight stop loss. Oh, stop loss would have been hit immediately though. You see, it's a tight stop loss in comparison to how much it moved in that day already. Like, so that was a 20-point stop loss. But we look from where 930 started from to where it was. So 930 started from down here. It's already 184 points. So that would have been the stop loss hit in like seconds. Tough. But you could have definitely, yeah. This is why I don't be trying to take like little candles like this, because I know price just runs through it. Like, it's just not strong enough. You could have took something like this. Wait for the retest. Yep. But now this is like 100-point stop loss. 77. Okay. Target the highs. You could target TP2 is easy target. Not gonna lie, TP2 is easy target. We just got tapped in. TP1. Salute. So you would have took a small loss of 20 points, but then you would have got back in. So you're risking one contract either way. It's hard to keep a static risk to reward, especially when you can't really play with the contract size. Like, can't really, because you only have one contract, two contract, three contract, four contract. Like, on most days I'm only trading one contract, so it's hard to play with the risk. You feel me? So really, how much the stop loss is just really my risk. So 77. So probably risking 24, I would have probably lost 125, 130. I don't know. And then risking 77, I would have definitely been risking like 300 something dollars. So I would have exceeded the loss by many. So I would have lost like 120, 30 dollars on the first trade, and then I've been risking 330 something dollars on the next trade to make another 600. So easy $500 day, $500+ day, like easy. But I know I also caught a sell up here. Let's see how I caught the sell up here. Oh my God, I'm moving so fast. Oh, look at that. Easy sells. I took this. Boom. Close, tapped in. Easy sells. That's my setup, man. Listen, that was what? 4 W days, 1 L day. No, 3 W days, 1 L day, no trade day, 1 no trade day. So I need to be more patient with my trading system. I need to be more patient with my trading strategy. That's definitely key here where I'm missing. I'm not being patient. I'm trying to catch a trade every day. I'm not being patient enough. So this what I'm doing right now is honing in on my skills and making sure that I'm even better at executing when next week comes and I'm ready, pumped. I'm ready to trade again. So that's my video, y'all. Make sure you guys do the same. If you like anything from the video, like and subscribe down below. Love y'all.